Hey there, Chris Middleton here with Make Taxes Fair, and we're here today to kind of recap some things around S corporations and reasonable compensation, right? What is reasonable compensation? Like, what does that even mean? And what do we need to do about that? So, sharing my screen here a little bit, or a lot of it, however, which way you want to go about that. So the S corporations are a really popular tax savings vehicle because they help to eliminate the self-employment tax bite, right? So which is 12.4% Social Security, 2.9% Social Security Medicare, and that's the cents on every dollar of net profit. So basically, before income tax even enters into the picture, 15.3% of your income is going to self-employment tax, Social Security and Medicare. And if you're looking at $200,000 net profit, it's all treated as self-employment income. That's 28, a little over 28 grand. Whereas an S corporation, you have the ability to say, hey, on that same $200,000 net profit, you'd split your profit between W-2 compensation for the owner or operator and the owner draw. So in this scenario, a little over $16,000 in tax savings. Well, reasonable compensation is a requirement because with S corporation, again, if you have $200,000 net profit, guess what? That income is exempt from the Social Security Medicare. But Uncle Sam's sitting here glaring at you saying, I want Social Security funding because guess what? We need to pay for the program that is Social Security and Medicare. So as a result, they look at S Corp owners and they say, hey, you need to have this reasonable compensation requirement and pay yourself a W-2 wage. So the example I give here is, $200,000 with $80,000 of W-2 wage. Is that reasonable? I'm going to say no, or probably not. It might be. So, what are the factors that go into determining what is reasonable compensation? Well, there's several factors: training and experience, duties and responsibilities, time devoted to the business, comparable salaries, business complexity, compensation history. So the goal is you want to set a salary that's low enough to reduce your Social Security Medicare, but not so low that it's going to trigger an IRS audit. And that's what we're here today to talk about, is how do we determine reasonable compensation? Well, one of the ways that we do that is we use at Make Taxes Fair, we use this handy little tool that we pay for and subscribe for every year called RC Reports. And RC Reports, we're going to go through here, start a new report. And I'm going to actually just kind of walk you through this process. So we're going to say Elmer, sorry, I can type until people are watching me. Elmer Fudd with, Rabbit Consulting Group. And we're going to say Elmer, his email is Elmer at Fudd Consulting, or no, Rabbit, I'm sorry. We're live and unscripted here, folks. So Rabbit Consulting Group, CG.com, right? So what we're going to do here is figure out, okay, what type of industry is Elmer here in? And we're going to say other services other than public administration. And we're going to kind of go down and find where his, we're going to say business, labor. Nope, let's see. Find, we'll just go with business, professional, labor, political, and similar organizations, and choose that. So the NAICS group or code is the code. The NAICS stands for the North American Industry Classification System. What that is it tells the IRS, hey, this is my industry, and as a result, they can then cross-pollinate across all the tax returns that are in that niche or industry and say, hey, here's what we expect things, expenses and compensation of officers and such to be. So that's, finding the right niche and NAICS code is key. But because we're using Elmer Fudd with Rabbit Consulting Group, I taught Putty Tat. If you didn't watch Bugs Bunny as a kid, I don't know what to say about your childhood. But tax compliance for S corporations. So we're going to choose that one because we want to make sure that reasonable compensation, that the shareholders are paying themselves enough to meet the requirement for reasonable compensation. We can also do that for C Corps and normalizing compensation for valuation purposes or just other planning purposes. But this is the most common study that we do. There are three approaches common in determining reasonable compensation. The first is the many hats approach, which is, what hats do you wear in your business, right? You can pause and read through that, blow that up on your screen if you wish. But the many hats is effectively for owner operators in the business. A market approach is when we compare the business owner's compensation with others in the same industry, and often is when the owner is really in a specific position, is truly the CEO or truly the general manager for the same position. So if that owner is like, hey, everybody else manages the nuts and bolts of the business, and I'm the sales guy. I love sales. I want to be one of the top salespeople and the sales leader. We can do a market approach and drill down on just that position, right? And then the income approach is more for kind of investors where there's not really a standard to be looked at. But cost approach is what we're going to go with today. We're going to say that's for 2026. And we're going to say we're just going to begin the interview. So we're going to say that this person works 40 hours a week. I'm in Northern California, so we're just going to go with the Sacramento County because easy. I know that's where I am at. Come on, see if I can. Let's go Alameda County. Sure. Okay. So in this case, Elmer Fudd with the Rabbit Consulting Group, we're going to say, here's the kind of standard areas, maintenance, administrative, marketing, finance, HR, information technology, inventory management. We're going to say that he doesn't really fulfill any roles when it comes to janitorial or custodian, nothing really in the terms of maintenance worker, grounds care, keeper, that type of thing. We're going to say in the administrative role, he's filling some customer service. We're going to say in the marketing role, let's say he's in the technical expertise area, that requires, actually, no, we're going to take that one out because that, this is technical with chemistry, engineering, that type of thing. We're just going to say sales representative. We're going to say finance. He spends a little bit of time, working with the bookkeeper, payroll clerk, and accountant. And then let's say he does some employee training and development, nothing really inventory, nothing IT. And then in the management, keep in mind, if we choose CEO, right? If we choose the CEO role, that will result in a higher compensation model, right? And the reason for that is CEO is at that C-suite executive level is a higher paid position. General operations manager, again, is a higher paid position. So a classic example I give is there was a law firm operator. He was not an attorney. He was a law firm operator. So he was the primary kind of partner that ran the business. There were attorneys that were minority partners, but they were specialty, and he kind of came across this formula where he figured out a business model that worked. Amazing. As a result, his name was Scott. Scott was running the business. He was taking care of things, and he was the CEO, and each of the attorneys were there was a business law category, there was a family law category or niche vertical in their firm. And so he was kind of in charge of, maintaining the business structure. Well, he was a true CEO, right? They had grown their firm to well over 500 people over the past 3 years. He's like, 3 years ago, I knew the names of all the associates. I knew their kids' names. They had grandkids. I knew what they were doing for their summer plans. Like, he was really an owner operator. But then over a 3-year stretch, they grew to the point where he's like, I don't know all the names of the people. It's 500 people in the organization. I try to rub elbows as much as I can with everybody, but that's just too many people. I really know my direct hires, my direct reports, and the people right below them, right? So that's a true CEO. That's a true, executive and operations type manager. So if you're not one of those, if you don't have that size of a business, I would say, business officer and manager, and maybe sales manager. But we're going to keep it simple for this case study, right? So here are the different tasks that we spend time and say, okay, here we go. Now, if you really want to get in here and get drilled down on this, you can say, content, web content specialist. Maybe Elmer just really gets a lot of joy out of spending time doing web content. So you can kind of drill down and search for specialty tasks if you so desire. So we're going to go in here and, Elmer, the time that he spends in the CSR type position, he's doing about 3 hours a week there. He's a higher than average sales role. He likes to do that, spend some time there. He's a below average, bookkeeper, but he's spending a little bit of time with the bookkeeper because he's kind of in charge of the business. So he's spending a little bit of time in those functions and spending time there. We're going to say he's an above average on the employee training and development. And he spends quite a bit of time kind of working with the other coaches in business. So let's say 18 hours a week, or 45% of his week is spent with the other business and coaches. He spends, he's an above average kind of business office manager, and spends, let's say about 18% there, 7.2 hours. And then the balance of his time is spent there, and he's a high proficiency web content specialist. So you can see we've been able to kind of bifurcate his time, where he spends time on a week-to-week basis. We've gone through this really quickly, and I'll show you here in a minute, what this means for the report. But here we go. We've got Elmer at a reasonable compensation of $148,650 per year. And you can see where we find his time is spent and where the compensation is deriving from. So he spends about 18% of his time in management, but about 22% of his compensation is directly tied to that role. So the nice part about this, and keep in mind, we chose Alameda County, so that's a very high cost neighborhood, very high cost area. So, customer service for that neck of the woods is running at about $35 an hour. Sales representative running at about $89 an hour. I tend to see the sales roles being higher dollar compensation wise, right? Bookkeeper, payroll clerk, accountant, very minimal time, right? But those are kind of the hourly rates that he's looking at. And then kind of the employee training and development, the $63 an hour. And again, office manager and web content specialist, kind of business operations role, higher hourly rate, web content specialist, higher hourly rate, right? So, if he was in a different area or a different part of the country, you could see this, go really up and down based on location, because this report and this tool really drills down on location. So where are you boots on the ground, and pulls data from the Bureau of Labor Statistics, the census data, and then reasonable compensation reports their own database of wages that they pull. And the methodology that they use is quite a few, but they are taking the cost approach from information with the job aid or IRS valuations, the IRS or the reasonable compensation methodology report that they have internally. And then they break into these other factors, which salary history, travel requirements, key relationships or contracts, et cetera, et cetera. There's also different court cases that this tool draws on to help determine what is reasonable compensation or not. And so at the end of the day, instead of guessing, which a lot of business owners, when it comes to what should I pay reasonable compensation wise, right? Instead of guessing, we can actually come up with a methodology and document what is that reasonable compensation. So at Make Taxes Fair, we actually have, and the reason why I kind of wanted to walk you through that is we actually have a compensation offer that we give to clients. So if you're currently working with us at Make Taxes Fair, let us know and say, hey, if we haven't done a compensation study for you, or it's time to refresh that compensation study. We try to do those once a year for our clients, or every year to year and a half, just to kind of tuck that in the file. This is a draft version. But we tuck that into the file in case there's ever an audit. We don't like the A word, but sometimes they happen. So we want to make sure that the reasonable compensation study is done. And if you're working with us, you can ask for a compensation study. If you're not currently a client, you can go to maketaxesfair.com/compensation study. And this kind of walks through some, what is a compensation study, and you can kind of input your time. You can see like we have those same categories, and you can kind of say, hey, I'm in the business manager office role, and I'm spending, 15 hours of my week there based on a 40-hour a week kind of job. There's some FAQs like who should obtain a compensation study, what do I get when I purchase a compensation study if you decide you want one of these from us. Why do I need to perform my audit of my time? What if I have multiple businesses? What if I'm an LLC that has not made the S election? And then what does a time audit look like? So here's the different roles, responsibilities. I wish I only worked 40 hours a week. What if I work more than that? We kind of give you a guideline on how to figure that out. What other information do we need other than your time audit? And then the roles, responsibilities, we want you to describe that. And then what if I'm paying myself less than the compensation study says? So these are the, kind of some FAQs that we invite you to check out. And ultimately, don't guess at your compensation, right? When it comes to determining your compensation, look at where you spend your time, and you can definitely DIY this type of report. We had a guy who went through and did a DIY compensation study. He was paying himself about 30 grand a year. A lot of people seem to just pick that number randomly. I don't know why. But he's paying himself about $30,000 a year. On his own, he kind of looked and said, hey, it looks like I'm low. I should probably be paying myself 50 to 55,000. Well, we actually drilled down with a compensation study, really looked at what his hours were and where he spent his time in his business and the different hats that he wore. And based on where he lived and what he did in his business, we actually came up with a compensation study that said it should have been closer to 75 to 80,000. So guessing, and he was doing some educated guessing, and he came up with 50 to 55. And I asked him, I said, hey, Bob, how much time did you spend doing that? And he said, well, ChatGPT and Claude, they really helped, the AI tools. But he spent about 5 hours kind of noodling over that, figuring out how much should he pay himself. And ultimately, better 50 to 55 is better than the 30,000. We both agreed. But he understood when we did the compensation study and it came out to be, that 75 to 80-ish in that range. He's like, I see how the compensation study got to that point. So this tool, and you saw how fast we can produce that, really takes the guesswork out of that. So if that's something, again, if you're a Make Taxes Fair client and you or you're part of our Launchpad program, or you're connected to us in any way, we are happy to put that together for you. We limit it to 2 per client. If you have additional compensation studies that you want, we do need to talk about what we charge for that, because the tool does cost us money. But ultimately, you can see how fast that was produced, and the accuracy at which it kind of, and the level of detail that it kind of produces with that. So that's kind of an overview of the reasonable compensation requirement and kind of how we get to this methodology on how we get to those results. I hope this has been helpful. If you're watching this on YouTube, this video is recorded as part of our DIY, what we call our Launchpad series, that's designed to kind of help business owners within a certain income threshold, and also business owners that are working with us on at higher levels, but as a Launchpad method to help provide education and context, so that when we meet with you, we're not spending time going over the basics. You've already kind of been exposed to some knowledge, and we can spend our time together really deep diving on questions that you have, instead of helping you understand the basics around that. So it's been a very quick overview, but I hope this has been helpful for you. Thank you for your time. We are grateful to serve our community. And again, if you're finding this on YouTube or inside of our community, we are proud to say friends don't let friends overpay the government. That's part of why we put time into educational materials like this. Please share this with a friend who's self-employed, and look to see you in the next training module. Thank you so much. Make it a great day, and bye for now.